What's going on, everybody? Welcome back to the channel. So we're going to talk about my trade today. I took a break from GDX and SLV. I wasn't quite sure just personally where we were going, and so I decided to trade NEO. I'm going to explain that. It's been a while since I've traded NEO, but you know, I am interested in the EV market. I definitely follow it. NEO had some news. It had gapped up in pre-market. There was news that they'll be releasing a new sedan in 2022. So it gapped up in pre-market. There was a little bit of momentum, and so I took a trade to try to play that. But we will talk all about that in a couple of moments here. I do want to go over the commodities, the gold and silver news. I want to talk about Bitcoin falling over 20% at one point in time. The cryptocurrencies are currently in bear markets. I mean, technically, they're in bear markets right now. But the gold and silver prices, right? Well, you have the overall CRB, the commodity index, and we're still making new highs, right? We're making new highs. Higher highs, higher lows. You can see this chart the last few days. Since November and into December, we have been steadily climbing higher. But today you have all of the oil, crude, Brent, natural gas, all of that stuff is down. I wouldn't say substantially, but it's down almost 1%, right? Like you have gasoline down almost 1% right now. But going along with the rest of the commodities, gold and silver is still trading lower today. Let's look at the gold chart. So these are the gold futures. We were as low as like 1825, 1830, somewhere around that range. But as you can see, it looks like gold is attempting to sort of bounce off of this demand area. Silver chart looks similar. Remember, if you want to look at the futures, it's /SI for silver or /GC for gold. But you can see the silver chart looks similar as well. I might actually get rid of this 1 hour demand zone because it was invalidated. But it does look like silver and gold are attempting to recover from the sell-off. Now, I think we have a little bit more downward potential, okay, in both of these metals. Are we going to see silver go back down to 22? Like, are we going to see these future contracts go back down to 22? Highly doubt it. The futures contracts right now are at 25.23 about, and then if we look at the actual price of silver, we're still up above 25. Where are we at? Yeah. Oh, no, we're not. We're at about 25. What does this say? 25.15. So the futures contracts are actually a little bit higher right now than the actual price of traded silver. But you can see we're around these resistance levels. Right, this is where we're at right now. It's near the levels of resistance from the last couple of months. So what does that mean? That means that we could be in the area where we're going to find some support, right? We found support earlier on this low. You can see that clear as day. Right? We're right in that area. So I wouldn't be surprised if we bounce from here. I do think we're going to kind of chop in this range. I don't think it's going to immediately go back up to 27. There's a lot of selling pressure up there. There's huge supply areas, as you can see. But when we're talking about silver, I think we're going to kind of chop around in this area for the next few days, maybe the next couple of weeks. Could we see some more downside? It's absolutely possible. I would like to see silver go back down to $22 an ounce. I just don't think that it's realistic at this point. Let's look at gold again real quick. So, with gold, could we get back down here to like the $1,816 range? Maybe, but I think it's more than likely we're going to chop around, $840 to $1,900. That's what I think the gold range is going to be in for the next few days. I don't think it's going to immediately recover. I could be wrong about that, though, right? We could see some kind of strange rally in the precious metals markets. Maybe they kind of do bounce right off of these demand areas. But another reason I don't think that's realistic is because if you look at the dollar index, right, the dollar index is definitely trying to break this downward trend. You can see the last 3 days, we've had a nice little rise in the dollar. We're in a demand area. We also consolidated for a few days. And the third real confirmation for us that the dollar may be trying to break this downward trend is that you have a balancing candle, right? You can see this red candle right here. This is more of a balancing candle. The bulls and the bears kind of absorbed each other's, momentum. And now we seem to be at least attempting to reverse course. That being said, I think long-term the dollar could still experience some weakness. But when we think about the DXY, all right, this is not the only way to measure the dollar. It is the most popular way, I think, that people, that are trading or maybe people that are involved in, equities and they want to see kind of what the dollar is doing. The DXY or like the VIX chart, the volatility chart. These are the basic charts that I look at just to sort of gauge the macro environment. But the DXY is not the only dollar index, right? The other thing about the DXY is that it's very overweighted in euro, right? The euro dollar. So that being said, we just don't have all the information looking at the DXY. But just going by this chart, I mean, it's obvious the dollar is in bear market territory right now. And, because of this, the last couple of days, the momentum from the last couple of days, I think this is why we're seeing the declines that we are in silver. This is one of the reasons in silver and gold we're seeing these declines. Not to mention there's probably a lot of manipulation in the heavy metals market. I'm actually going to remove this supply area because that was invalidated as well. There's obviously probably, manipulation. We know the currencies are manipulated. We know that the metals are manipulated. The stocks are manipulated. So there's other factors as well. But I think maybe I was a little gung-ho because I did put on a couple of positions as soon as we broke out here. And I did purchase some physical bullion last week because I'm not going to lie. I caught FOMO. I was like, we broke up above 26, right? We're in 27 range. The start of the new year. Remember, we talked about that wedge pattern right here. And it broke out, but it was kind of a false breakout. I should have been more aware of the fact that there was heavy supply. There was a daily supply area right up here, right? Because on the daily chart, this is where I charted that from back in August when it hit $29. I should have realized that we had, that we were near the top. But that being said, I didn't buy a whole lot of physical bullion, and I didn't buy, I didn't put much more than about $100 into some mining stocks and ETFs. So on Friday, when it crashed, I did have some money left over, and I purchased more mining shares, more mining ETFs. And if we see more downside, I'm going to continue to purchase. And hopefully we do get, towards $23, $24 an ounce. That would be great. I would love to buy silver jewelry, silver bullion at those prices. Same thing with gold, right? A lot of us are expecting a stimulus check this week. And so, you could always spend the $600 on some gold bullion, maybe a little bit of gold jewelry, a gold ring, just something that's going to hold value long term. Of course, with the premiums on jewelry, you're going to be paying a little bit more. But that being said, in hindsight, I kind of wish I would have waited, when I was buying silver the last couple of weeks, waited until today. Today would have been the great day to, the perfect day to go out and buy more bullion. But, dollar cost averaging into a physical stash of silver bullion or gold, you're going to catch some of the highs, you're going to catch some of the lows. This is what dollar cost averaging into the market it's all about. So, from my analysis, just looking at, the technicals here and considering the fundamentals, considering that there's still going to be, massive stimulus, money printing, essentially, quantitative easing, all of these things sort of weakening the dollar, not to mention, a rise in CV. My local gym is actually now closed until like February 8th because of the rising situation. I think all of this stuff is very strong, very bullish for precious metals. I'm not calling for the dollar's complete demise. I think that is a little too eternally bearish, right? It's ridiculously bearish, and I just don't know how realistic that is. But I'm hedging. My main base is metals, right? That's where I really think the most opportunity and the safest opportunity presents itself for me personally. But I'm sort of hedging that with investing in stocks, investing in some paper, precious metal assets, trading on a daily basis. And we're going to talk about my trade here in just a moment. So commodities still rising. Gold and silver, I wouldn't say it's weak, right? We're still... the days of $20 silver are definitely gone. I highly doubt that's ever going to happen. And even if it did, I would be very happy about that because I could buy in at $20 an ounce. But I really don't think that's going to happen. $700 gold, $1,000 gold, never going to happen in my lifetime, right? I'm confident of this. And I think long-term precious metals is the best opportunity for me personally, the safest opportunity for me personally. And it's a way to sort of preserve my wealth outside of the system. And, thinking about the macroeconomics, the dollar's not going to completely collapse anytime soon. If anything, we're seeing a little bit of short-term strength in the dollar. Equities were kind of down a little bit on the day, but they're still hovering around all-time highs. Bitcoin, all right? I don't know if let me see if I have a Bitcoin chart. Bitcoin is actually technically Forex. Do they have it here? Yep, they do have Bitcoin. Bitcoin, I would consider it more like foreign exchange than anything else at this point. But Bitcoin is down, how much is it down here? Like 20%, right? 19.15%, 1907. Ethereum is down 25, 30%. So the crypto market is technically right now they're in bear markets. So possible entry soon, maybe. I might, put on $100 exposure to either Ethereum or Bitcoin. Maybe I'll throw $100 in both at some point here. But we just came off of like the $40,000 high. Maybe Bitcoin completely collapses. I mean, I know there's people like Peter Schiff calling for that possibility. I don't know. I think there is a lot of momentum. The herd seems to be piling into these crypto markets. And I was saying yesterday in my video, my podcast from yesterday, you can catch that on iTunes, Spotify, YouTube, BitChute. But my podcast from yesterday, I was talking about how people at my work, at my job, are talking about how they put a little bit of their paycheck into crypto, into Bitcoin, or they're using Robinhood and they put some money into Tesla. And it's like when the people around you that aren't really in the know are talking about these big bubblicious stocks, it's a pretty good indication to me that I don't want to be anywhere near these stocks or cryptos. And, we knew this was coming, right? We knew the crypto market was going to experience this kind of a pullback at some point in time. But maybe it fully recovers in a couple of weeks, couple of days. But I don't know. That's a pretty big hump right there, right? It's hump day in the crypto world. But on the year it's still up like what, 300%. So I think that's what that means, yearly 300%. All right, so let's talk about my trade. I actually traded NEO today, so I'll show you the proof over here. Actually, let me go to my my Instagram real quick. So my trading account this morning had about $300, and I have on my TD Ameritrade accounts, I have about $600 now. But I did move about 150 on Friday into one of my mining stock portfolios, and I bought things like ASM, I bought SILJ, I bought GDX, I bought the Sprott Silver Trust Fund. Don't go with SLV, in my opinion. All right, I'm not going to tell you guys what to do, but I'm not interested in SLV. I would much rather have shares of PSLV, which is the Sprott Silver Trust Fund. But my account this morning had about $325, $327, something like that in it. You can see here's the NEO contract. So we made about $82 off of this one trade, and I'll go over the trade with you guys in a moment. We made about $82, which was great because that's like a 24%, almost a 25% gain in my, little trading account. And that's what I want to focus on is the percentages, right? The $80, it's more money than I'm going to be making tonight at work, right? On an hourly wage basis. This is more money. So it's very exciting. It's probably the biggest, the best trade I've made since the beginning of the new year. And I'm really fortunate to be back, doing this again after getting my confidence back and, saving up some funds and stuff to kind of experiment with this. But you'll see when we go over the trade here, this is why I like to scalp, because the power of options allows even, a little guy like me, a little trader, a little retail trader in my little Thinkorswim account, it allows somebody like me to make a 24% gain even with a couple $100, right? $300, $350, $500, $1,000. Anybody potentially could get involved in something like this, but there are risks, right? There's definitely downsides, and I'll talk about that too. But I'm going to leave all of this money in the trading account. I probably will end up putting some more money in this trading account, but I wanted to keep it small. And then Friday when we had the crash, I took about $150 out and put it into some of these silver stocks and gold mining stocks because, they were just opportunities I didn't want to pass up on. But, I'm really going to try not to take money out of this account, and I just want to take this account to, all-time highs. I want to take this account as far as I possibly can take it and, hopefully get to 1,000, 2,000, 5,000, 10,000 and beyond. That's my goal for 2021. And I think I'm going to be able to do it because I have a little experience from, the bull market in August, the bear market in September and October. And I just have a little bit more confidence than I did back in November when I kind of got wiped out. So let's look at NEO. As you can see on a daily chart, right, NEO gapped up in a big way. And we're kind of balancing out right here. This is today's candle. It's kind of balancing out. The bulls and the bears are fighting for control. NEO came out with some news today. Basically, they're coming out with a sedan, right? They announced that their electric vehicle sedan will be released in 2022. So it's just kind of like one of these things, especially in the EV market. As soon as there's news like that, it tends to make these stocks, gap up and go crazy. Now, the breakout was kind of a false breakout. I was looking at the 1 hour chart, and this is what really got me excited about it. You can see this big engulfing green candle right here, followed by this little red candle, right? And it looked like a 3-bar play going towards the upside, getting ready to play out, right? It looked like it could have been a 3-bar play. And that's how I was kind of trying to play this. As you can see, this is an hourly chart. That did not happen, but we're still holding strong, right? We gapped up. We're still holding, that level. It's at like 62.96. Was kind of like that, one of those lows right there. But let me just show you. Let me show you on a 1 minute chart what I was actually doing. So you can see this sort of wedge pattern forming, right? And usually that means that something's about to happen, right? It's about to either go a lot lower or go a lot higher. I was betting on the fact that we were going to break out and go higher. That did not happen. As you can see, right in the open, bam, we dipped below VWAP, and we didn't even touch into this demand area that I had charted. And these demand zones, supply zones, these are not indicators. These are manually charted by me. I'll do a video on supply and demand eventually, but you should watch Carmine Rosado on YouTube. He explains the supply and demand strategy, and ever since I've been using it, it's been working for me. So we had on the 1 minute chart, we had a little bit of volume here, right? It's about 6 million shares were traded, but we very quickly got up above VWAP by the third minute. So this is like 9:33. We had closed up above VWAP, and that was my entry. I got in. All right, as you can see by my trade history, oops, this is the wrong account. I got in for $3.25 a share, so it was a $325 trade, and I exited at 405, okay? So I rode this all the way to about this candle right here. I could have sold a little bit earlier, and I would have been up more like $100, $110. But we started I should have sold at this candle, but I was getting kind of greedy. We started pulling back, and I exited on this red candle. So my entry was the close over VWAP on a 1-minute chart, right? Let me zoom out of this a little bit more, and you can maybe see the pattern in context. Yeah, so, and we also had demand, which we didn't even hit before we started trailing upwards. So we closed above the VWAP line, right? You can see that candle right here. And then 1, 2, 3, should have sold it on the third candle, but I got out as this red candle was forming. And I'm glad I did because, it wasn't just a little pullback. It did sort of break out, but it was a false breakout. This is what's called a false breakout. And the reason is because we already gapped up on the day. And the news wasn't that substantial, right? It wasn't like a revenue number or sales news or anything. It was just news of a new sedan. So traders were kind of piling into this. People were trying to short it. There were bulls that came in. But eventually it looks like it's pretty much been chopping around. It consolidated. So it goes to show you most of the momentum happens first thing in the morning, right? This is why I like to trade the open. Get in, get out, right? If I take a trade and it doesn't go my way, I immediately get out. Maybe look for another opportunity or something. But if I take a trade and it does go my way, and it's a 25% gain, that's it. I'm out, right? Because I'm technically outperforming the market, and so I'm not going to ruin that and overtrade. That was one of the things that I really was not getting right. I was over trading, back in September, October. I probably could have avoided a lot of those losses had I not taken so many trades. At this rate, though, because I really didn't see any opportunity in the silver and gold ETFs. I was looking at SLV. I guess I could have traded SLV, could have made a little bit, right? We bounced right here, but it was just so iffy. I wasn't confident that we were going to go higher on silver. And if I look at the gold ETF that I usually trade, yeah, just a lot of consolidation, right? No real movement here. I mean, I guess we're trending higher, but, we're over VWAP. But NEO, when I saw the news this morning about the sedan, then I went to look at the chart. I saw this wedge pattern forming, and I decided just to watch it and, happened to catch this move. So that's basically the methodology behind how I, find some of these trades. Just wanted to offer some inspiration for people out there that may be interested in getting into this. Yes, even with, an account size of $300, you too can jump in the game. It is dangerous, right? You could lose money. Probably shouldn't listen to me. I'm not a financial advisor or anything like that, obviously. But, from my experience, this is a very rewarding process. I'm really excited to wake up every single morning and follow the markets, having, a little bit of money in the market so that I can at least stay involved following this kind of thing. I love it. I really do. And if you had told me a year ago that I would be trading options, I would have, I would have been like, what? What are options? I barely knew anything about the stock market, and the crash in March is really what got me into all of this. If there's one good thing about the global situation we're dealing with, it's that it inspired me to become more financially aware, economically aware, and to really focus more on my personal finance and my financial growth. So with that, I hope you guys enjoyed the video. Please do give it a big fat like, smash that like button, and comment down below. What are you watching? What's on your watch list? Where are you putting your money? Follow me on social media. The links are in the description down below. I want to thank everybody for supporting me on Patreon. Thank you for supporting me on PayPal and all the ways that you guys support the content. It is much appreciated. And with that, I hope you guys have a fantastic rest of your day. Until next time, God bless.